This is our Forex blog for January 22nd, 2014, and these are our currency indexes, which I think are some of the easiest ways of trading using our software. It lets you see visually what each currency is doing. We actually create a synthetic index, just like the S&P 500, NASDAQ, and Dow, of all the euro pairs, all the dollar pairs, all the yen, and all the pound. And you can just visually see how strong a currency is, like the pound today, just absolutely strong and exploded up. Typically the white containment bands contain price. The lower ones contain it from the bottom, the upper ones contain it from the top, as you can see here, 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 and here. And let's take a look at some of the other currencies as well. The Swiss, the Australian shot through it, but kind of hugged it. The CAD was super weak as well. Today's kind of an odd day, but probably 70 to 80% of the days price does not go through the 2.0 white containment band. But nonetheless, you basically just want to buy strong currencies versus weak currencies, and if the weak currency is on the top, like the euro, you want to sell it versus a currency that's strong. So around 5 o'clock, the euro is trending down, the pound gets strong. You want to sell the euro pound, and basically this thing shot down so much that you really don't want to be selling it at its lows. You want to wait for some kind of a pullback, your stop above the high. Obviously that didn't lead to too much profit. The second trade was a little bit better, kind of went down. A lot of times you can just, every time it makes a new low and has a pullback, when you find a currency that's this weak versus one that's that strong, every time it makes a new low and pulls back, you just keep putting your stop above the swing high, and eventually you get stopped out right here. And you can also just simply wait for the first pullback and kind of draw a trend line on there, and it pretty much most of the time gets you out around the same time. But you can see that the key to trading is small losses, big wins. The first one, you were risking this, and you pretty much made a little bit less than what your risk was. Not good. In the second trade, you had 5 to 8 times bigger profit than what your risk is. And that's the key to trading. That's why using our software really works. Let's take a look at more normal trends, like the dollar that stayed inside of the bands. The monthly trend's up, the weekly trends started the day slightly up and then shifted back up. It went above its hourly moving average. And what's beautiful about this is you can draw trend lines on these charts, and especially whenever there's 3 touches, or approximately 3. You got the beginning of it, 1 touch, 2, 3. When it breaks through there, even before it broke the hourly, it's very likely to go up. The more touches of a trend line, the better. And by the way, our drawing tools work on the currency indexes. For instance, this last swing right here, guess where it went? Right to the fib target, right to the lower containment band. Our perfect oscillator is showing a minus 80, which most of the time when it hits a minus 80 you get a bounce. Plus 80 was the high of the day, dropped. Minus 80 right here, went up. It's not quite at the minus 80, nor is it here at the upper level, but you can see up, down. Here, went up for about an hour and a half. Here was the low. So when this breaks the trend line, you want to buy the dollar versus a weak currency, or if the dollar's on the bottom, you want to find a weak currency to sell against it. Let's take a look at some of the other ones at this time. So we're looking for a weak currency that's maybe about to go down, or one that's been trending down that's just gone up and is likely to reverse. You can see the New Zealand looks like it's about to go down. However, the weekly and monthly trend is kind of up. The Australian is probably a decent one. The Swiss has been going up for the last couple hours, and it was at an extreme, and it continued up. Sometimes when they hit these extremes, they kind of inch their way up. Those are phenomenal trades. Anytime you see it continuing up with a perfect oscillator at an, pulling back, that's a divergence trade, and the dollar Swiss very likely at this point to be going up. Let's take a look at that around 9:30. And you can see even before that it went up, you buy the pullback, it goes up again. About 25 pip profit there. When you see a currency that is strong like the dollar, or is likely to be strong like the dollar, and another one that's weak, basically you've, by the next pullback, put your stop right here, and as you can see in this, the win versus loss, what the risk versus reward ratio is, it's huge. And that's the key to trading. Don't worry about whether a trade works or not. Just worry about, most of our trades you're risking 5 to 10 pips, and you're looking to make 10 to 30 pips or more. And sometimes you're going to catch 30, 50, sometimes 100, 150 pip moves, but most of the time they're going to be 5 to 25 pips. So if you risk 5 to 8 pips and you make 20 pips, you don't even have to be right half the time. And most days you'll find that our currency indexes are pretty high probability, especially when you use and you focus on trading in the longer term direction. For instance, the CAD here, very weak. Daily trend, weekly trend, monthly trend, rallied up, pulled back, broke the hourly moving average. It's very likely at the 50% or 62% fib level to reverse. And you can see it kind of came right up to the 50% level. Guess what? Our perfect oscillator is right at an extreme. This is a wonderful time to anticipate a sell in the CAD. Now let's find a strong currency to buy it against. The Australian was quite strong at that time, pulled back to the hourly. It hit an extreme and is kind of going sideways. You might want to wait for it to start going up as you watch the index charts to avoid a loss. But nonetheless, even if this goes sideways and the CAD falls, you're still going to make money in the trade. Your best trades are obviously going to be the ones where you buy and the strong currency goes up and the weak currency goes down. But let's just take a look at this coming up to 7. Here's 7, and as you can see, as this one's kind of going sideways and this one falls, it still goes up about 10 pips over the next hour. And that's, the beauty of this. When one currency doesn't necessarily do what you think it's going to do, but it doesn't fall, and the other currency does what you anticipate it to do, you can still make 5 to 25 pip profits. Let's find another one at this time that's likely to be going up. Obviously the pound, super strong. Yeah, this one exploded up, kind of pulled back a little bit. Normally they don't go through these bands, but when they do like this and they shoot through it on one bar, typically it's going to try to go up again. This is probably the highest probability, even though it's a little bit risky because it's up so much. Pound, CAD at 637. It's very likely to go up, and you can see it does. I mean, this is a pretty big move. If we get some of that previous bar off it, you can see it's kind of goes sideways and then up 25 pips, sideways again, it breaks out, and you can see it's just astronomically huge move because you're buying one of the strongest currencies versus the weakest currency. And of course, a lot of people just want to trade based on our signals, and you can see today how they performed. Here was the first trade. You would have been in here, stopped out. Second trade, you actually flipped when it went long right here, so you made money. And you bought here, and you got out of this when it flipped short. You shorted here, and you actually lost money. And on this third trade, you got in here and you're out here. Fourth trade, you made money. Fifth trade, you made money, and you flipped from being short to long again. You went long, you made a little bit of money on this trade. You went short, you made a decent profit on here. And you can see most of the trades were winners, and one or two decent sized trades will get back all your tiny little losses. And that's really the key to trading. Again, small losses, big wins. We're planning on releasing our new Forex Signals this week. They're vastly superior than the signals in our software now. I've been working on these the last month, maybe 5 weeks. and I think it's ready this week for release.